The closing bell has rung, but the business story continues. I'm Robert Tan. You're watching Business Brief. Let's get started. Corruption scandals drag Philippine growth in the second half of 2025. IBON warns of a broken economic model dating back to 2017. Agriculture Department tightens scrutiny of farm-to-market roads. DA battles ways to safeguard food security and rural incomes. Development Bank of the Philippines steps in after public-private partnership collapse. State financing revives long-delayed Baguio public market redevelopment. AI breakthrough reshapes cancer screening. World-first trial shows algorithms detect more breast cancer cases. World Health Organization downplays global threat after India Nipah cases. Low transmission risk spurs no travel or trade restrictions. Corruption scandals appear to drag the economy down in the second half of 2025. But IBON says the real surprise is that the damage runs deeper than politics. The research group says the country's growth model has been breaking since 2017. IBON speaks as the Philippine Statistics Authority releases full-year national accounts. Economic growth slows to 4.4% in 2025 after a weak fourth quarter. IBON says the slowdown reflects weakening household consumption, wage employment remains stagnant, remittances grow more slowly, agriculture and manufacturing continue to be neglected. IBON warns growth stays around 5% or lower without structural reforms. These include agrarian reform, massive public investment, and a long-term industrialization plan. This means short-term stability is not enough. Without deep economic reform, slower growth risks becoming the new normal. A food security emergency meant to be temporary quietly becomes the status quo. The rice emergency declared in February last year remains in place. It stays pending the passage of a law amending the rice tariffication law. Agriculture Secretary Francisco Chu Laurel Jr. says the emergency is needed for now. He says it helps manage rice supply and demand. This remains in effect until the proposed Rice Industry and Consumer Empowerment or RICE Act becomes law. The measure seeks to restore key powers to the National Food Authority. These include registering and licensing industry participants. It also includes inspecting storage facilities, seizing hoarded rice, and managing buffer stocks. Chu Laurel says these powers help stabilize rice supply and prices. He says they also protect farmers and consumers. For the Philippines, this means rice policy remains in transition. Until the law changes, emergency powers continue to shape food security and prices. Farm-to-market roads are supposed to connect farmers to opportunity. But the Department of Agriculture says not all projects deliver as promised. Now the agency is tightening oversight to ensure public funds actually improve access for farmers and fisherfolk. Agriculture Secretary Francisco Chu Laurel says the Bureau of Agricultural and Fisheries Engineering will lead nationwide implementation. He says this ensures consistent engineering standards across all projects. The DA also launches FMR Watch, a public platform. It lets stakeholders track projects from proposal to completion. Users can see budgets, construction milestones, and provide feedback. Chu Laurel said these roads lower production costs. He adds they raise farm incomes and support long-term rural development and food security. This means greater transparency and efficiency in rural infrastructure. Better roads could translate to higher farm earnings and more reliable food supply nationwide. A lifeline meant to protect low-income households now comes with national consistency. The Energy Regulatory Commission approves a uniform subsidy of 0.01 centavos per kilowatt hour. This replaces utility-specific rates that previously varied by location. Under the new framework, marginalized customers using up to 50 kilowatt hours receive a 100% discount on applicable electricity charges. Higher consumption levels follow existing discount structures. The goal is to ensure all Filipinos benefit equally regardless of where they live. The ERC says funds will be pooled into a national subsidy fund. This generates the benefits without affecting power distributors' revenues or overall tariffs. This means more predictable electricity costs for low-income households. It also strengthens social protection while keeping the power system financially stable. The Department of Energy's Green Energy Auction Program, or GEAP, is under scrutiny. The Philippine Competition Commission is sounding alarms over collusion risks, warning it could limit bidders and drive up prices. The PCC warned that the design of the GEAP may have reduced investor participation and created room for potential collusion. The policy dialogue stemmed from a competition impact assessment reviewing earlier auction rounds and the mechanisms that may discourage rivalry. Key issues highlighted include auctions divided by island groups, the use of representative plans to set green energy auction reserve or gear prices, and the release of price caps alongside pre-bid conferences. The GEAP is central to the government's plan to lift renewable energy share of the power mix to 35% by 2030 and 50% by 2050. The DOE says future rounds will remain transparent, technically informed, and designed to protect competition while supporting sector growth. For businesses, the alert underscores how auction rules can impact energy costs and investment returns. A century-old market in Baguio risks falling behind modern standards, but the Development Bank of the Philippines steps in after a private partner withdraws. The state-owned lender is ready to finance redevelopment. DBP President Michael De Jesus says the bank could back a modern multi-story complex to replace the aging public market. Funding may come through DBP's Ascenso program, which supports local government infrastructure and socio-economic projects nationwide. De Jesus says the bank aims to boost local commerce and support MSMEs. He adds DBP will collaborate with LGUs to promote long-term socio-economic development. This means public-private gaps can be filled by state financing. Upgraded markets could strengthen local businesses and create more resilient city economies. A deadly virus in India sparks global concern, but the risk of it spreading remains low. The World Health Organization says Nipah virus is unlikely to extend beyond India, easing fears over trade and travel disruptions. The WHO says it does not recommend any travel or trade restrictions after 2 confirmed cases in India. In a statement to Reuters, the agency notes India has the capacity to contain outbreaks. So far, there's no evidence of increased human-to-human transmission. Several Asian economies, including Hong Kong, Malaysia, Singapore, Thailand, and Vietnam, have stepped up airport screening as a precaution. The WHO says it is coordinating closely with Indian health authorities. It cautions that further exposure cannot be ruled out as the virus circulates in bat populations in parts of India and Bangladesh. Nipah spreads from fruit bats and animal-like pigs, causing fever and brain inflammation. Fatality rates range from 40% to 75%, and no approved cure exists, though vaccines are in development. This means businesses can proceed with relative confidence. Supply chains, travel, and regional trade remain largely unaffected, while health authorities stay vigilant. Mobile payments are meant to be convenient, but BDO Unibank adds a twist. They now reward every transaction. BDO Pay gives Filipino consumers incentives that go beyond just paying bills or shopping. From February 1 to March 31, users who pay at SM stores and retail affiliates earn a 100 peso SME voucher every 5,000 pesos spent, up to 300 pesos per customer. From January 16 to March 31, users also earn 1 rewards point for every 100 pesos spent on bill payments or mobile load purchases, tracked via the BDO Rewards card. BDO Pay also supports bill payments, money transfers, scan to pay, split bills, and request money features. This means mobile payments are becoming not just easier but more rewarding. Consumers gain extra value while using digital financial services, encouraging wider adoption of cashless transactions. We'll take a short break. Business Brief will be right back. The latest GDP numbers show how the Philippine economy is performing on paper. And at the same time, rising gold and silver prices are signaling how investors are responding to uncertainty. Today, we cut through the headlines, break down the data, and revisit the basics that matter for business, investors, and Filipino households. And joining us this afternoon is Michael Ricafort, an economist and market analyst with deep experience in macroeconomic trends and capital markets. He helps put economic data into context and explains what it really means on the ground. Good afternoon, Michael. Welcome to the show.
Hi, good afternoon, Mr. Robert, and to your viewers. Happy New Year, and nice to be back.
Thanks for joining us this afternoon. Now, Michael, the latest GDP numbers are out. Now, from an economist perspective, what do they tell us about the real condition of the Philippine economy today?
Well, it's relatively slow, primarily due to the government underspending, especially on infrastructure projects. Understandably, because of the flood control, the anomalous flood control projects. So, yeah, that's their initial response to prevent further corruption. They would rather be careful and not spend for the meantime. And then that has slowed things down. Government spending, yes, it's low single-digit levels. So, but if you look at the other items in the data, there's a 10% year-on-year decline in investments. That's one of the indirect consequence because wait-and-see mode for various investors amid the political noise. So they're waiting actually for, the missing element now is the further improvement in governance standards. So that's a big, and so far we have heard that already. This data is kind of lagging because it's as of the fourth quarter. So there's already the commitment from the economic team last November 17.
But Michael, Michael, beyond the headline growth rate, what parts of the GDP data deserve closer attention?
Well, like construction decline year on year also, but single digit. So, there's this slowdown. Well, it's a combination of factors. First, that's the cost of the exit of the POGOs, the ban on the POGOs. But of course, that's well calculated in view of it's a risk, it's a trade-off. So of course, they're not around anymore. So imagine the space that they used to occupy, the office spaces, residential spaces, even commercial spaces, they're gone. And of course, because of the alleged violations of the law, that's the consequence of the ban. But of course, this is part of the realities that need to be managed. There are vacancies on some office space, condominium units, some commercial establishments, the reduced rental income, those who used to be employed, the local ones, like for instance, the support staff, they're no longer there. So, and their consumption of electricity, telco, and other utilities also not there anymore. So that's part of the reasons why we have a relatively slower economy this year. And even at the start of the year, early part of last year, the higher tariffs, the trade wars, the protectionist measures by Trump, that effectively slowed down the world economy.
So basically a domino effect of what happens locally and also what happens in the global scene. But Michael, if GDP is growing or slowing down, but inflation still remains a concern, now how should Filipinos interpret that kind of growth?
Well, because the inflation is much lower because of the base effect, average of 1.7% for a full year of 2025 and 1.7% in December. That compares with economic growth of 3%. So economic growth is still faster. That would be a proxy for the incomes, the livelihood, the sales, other economic transactions. So it's much faster than the growth in prices. So at least, although it's of course that's among the lowest. Well, this is the lowest in since at the height of the pandemic. But outside of the pandemic, it's the slowest in 14 years, around 2011. If you look at the average economic growth is at 4.4%.
But it's still low.
Yeah,
But
but yeah, you go ahead, Mr.
But
Roy.
from your analysis, Michael, what are the main drivers of growth right now, despite even slowdown in infrastructure projects, developments? But how sustainable are they right now, these drivers that you see?
Well, services is still one of the, well, at least better performers, and the subcomponents of which, like healthcare, education, they're kind of resilient though, because they're some of them are recession proof. Both healthcare, good or bad times, people would avail of healthcare. And same goes with education. But the thing is, uh, well, consumer spending is 75% of the economy. So that's why it's very important going forward to have this catch-up spending to pump, essentially to make up for the slowdown and the underspending in the latter part of last year. And that has been the signaling from the economic team since November 17th. It would be hinged on the priority anti-corruption measures and reforms, including other reforms to further to further uplift and level up the governance standards. And that's a good combination because government spending that's still inevitable, as that's 13% of the economy, that's a major pillar of the economy. And it has shown, it has been shown by the underspending. And so same goes when they do the catch up, and this is already based on, well, preventing corruption from happening, and that would also boost confidence by investors, because this is, well, that's a missing element now. The commitment to further
Yes.
improve governance and anti-corruption measures and reforms. See, look at what happened at the stock market. The bottom was 5,500, the height of the political noise. But after that, after the reassurance, November 17, it went up already. It went up to as high as 6,500 a few days ago. Now, it's hovering between 6,300 to 6,400. So they took cue of that. Same goes with, well, the commitment from the president himself last December 9 for priority legislative measures that would further improve governance. First, the anti-political dynasty bill.
Yes.
Then the second is the reforming the party system.
Yes,
Then
definitely.
third is
All those
creation
go
of
hand in
donos.
hand. Yeah, all those go hand in hand in trying to get more confidence, not only on the local scene, but also with foreign investors. But let's just take it down a notch, Michael. For those everyday Filipinos to understand the GDP data, how can we make them better understand the data that's coming out, GDP, economic data that comes out, into what's happening on the ground, what the real everyday Filipino is feeling right now, tightening their belts, lower spending capacity? How can we make them better understand these data that are coming out?
Well, the people who feel the most of this economic slowdown are those directly and indirectly affected by the reduction in government spending on infrastructure, the infrastructure projects. For instance, there's now less people employed. So some of them, they don't have jobs now. What would otherwise, they would have otherwise have been employed. Same goes with the suppliers, the subcontractors, those part of the value chain and the supply chain, directly or indirectly. They experience reduced business. They don't have projects. They don't have jobs. They don't have sales. So they feel it. Now going forward, that would be key right now to restore government spending. And well, if they do that very quickly, in an expeditious manner earlier this year, based on good governance and anti-corruption reforms. So yeah, that would mean more people again employed, more
Yes.
businesses in those allied industries, many businesses and industries. They would have more sales, more employment, more incomes, more livelihood. So yeah, those who lost it, hopefully they regain it again with the catch-up spending. Then also, when this priority bills on governance, if those are, there's progress to that.
Yes,
These
if
are
implemented
passed.
right, yes. Hopefully, looking at it very optimistically in the next maybe coming months, hopefully that will work out. But Michael, based on your analysis and your observation, how does the Philippines compare with other ASEAN economies when it comes to the quality of growth?
Well, now, the Philippines used to be one of the fastest growing economies. Now it's closely moving to the average. When it was like at least 5-6%, it's been one of the fastest growing economies in the region. Even now at 4.4, yes, that's still decent, but that's of course not good enough because consumer spending has slowed, and you, you know why? What
Still
other
room
reasons?
for
Of course,
improvement. Yes, of course.
yeah, because we came from relatively higher prices, at least for the past 3 to 4 years. So yeah, prices may have slowed, the growth in prices may have slowed down, but they're still elevated. So people are tightening their belts, and they're trying cheaper alternatives. They're trying to save on other things, other scrimp on other expenditures, try to to adapt. That's why that's partly reflective on the relatively slower consumption as well.
Yes.
Now, now, alongside those lines a while ago, if these reforms are taken seriously
Yes.
and their progress further on those related to those reforms, yeah, investor confidence would improve. Investments would pick up because of the improved the recovery and the restoration of investor sentiment, and they
Yes.
would set up shop, create more jobs, create more
Definitely.
business opportunities. So that would be good for, there'll be more people employed. And
Now,
then the engines of growth, actually, the multiplier effects for all of
yes.
those, alongside with infrastructure spending, alongside with investments. The more from foreign investments, and
Yes.
for also from local businesses as well. If they come up with new investments, expansion projects. So yeah, that would sustain. Of
That would
course, there
help.
are other
Yeah.
pillars. Yeah, other pillars. Of course, it's OFW
But
remittances.
looking at gaining back investor confidence, let's look at the markets today. Gold and silver prices are moving higher. Many are investing now in gold and silver. Now, spot gold touches record high of $5,594.82 per ounce yesterday. Now, what do you think the market is reacting to?
Well, first, it has become, at least the resumption of the weaker dollar story. It's the lowest in nearly 4 years, since February 2022. So, this was triggered first by the easing cycle, the Fed rate cuts that would fundamentally reduce the interest earnings on dollar-denominated assets. That's one. Second, on Trump, because of the policy unpredictability, is involved in many of the geopolitical risks, especially those countries that are not in favor of his policies. So there's tendency to shift away from the dollar. And thirdly, a weak dollar, that should be favorable for U.S. exports, and that
Yes.
would make their imports more expensive, and that's consistent with the higher tariffs, the protectionist measures to protect U.S. businesses and industries from the threats of imports. If you look at it, yeah, that's causing it. So where's the money going? So there's this shift suddenly to gold at record highs. And because of the various geopolitical risks, a lot of them now, it's the risk of possible invasion by the U.S. on
Yes.
Iran. Then
Yes.
early on, we have other countries like on Greenland, Venezuela, and other geopolitical risks, and even the independence of the Fed. So that's causing a weak dollar, all shifting to, global uncertainties going to safe havens like gold, even silver, the other metals. Yeah, there may be some
But
slight downward
historically,
correction now.
Michael, does this happen? Why do investors turn to gold and silver during periods of uncertainty?
Well, it's first, they're dollar and gold, they're alternative investments. If dollar is lower, it's cheaper actually for them to purchase gold. So, unlike in a strong dollar environment, although gold doesn't earn interest, another thing, of course, there are other than the interest differentials, and maybe other than the safe haven. Well, the safe haven those related to the geopolitical uncertainties. That's another factor. This is something interesting. Central banks around the world, all of them, suddenly, the biggest reserve holdings of central banks now in gold. essentially overtaking U.S. government bonds or U.S. treasuries. So clearly, there's that shift.
The gold
That's
standard.
understandable. Yeah, because with these geopolitical risks, that's costly from the point of view of the U.S. They need to spend they invaded Venezuela, and then they're also now Trump signaled that
Yes.
the U.S. is planning to acquire Greenland. That would cost a lot, and there are other their fight versus terrorism in other parts of the world. So
But
it's going to
besides
lead to
gold,
wide.
Michael, silver is also gaining much attention, hitting at $120 per ounce. Now, is it recent strength? Is its recent strength driven more by industrial demand or investment demand, much like gold?
Well, it's investment and fund flows more than anything else. So, because the biggest importer of commodities, China is still relatively slow, being the second biggest economy and the biggest importer of oil and many other commodities. So their economy is still slow. So there's still softness in, the higher tariffs, the protectionist measures, and the trade wars also slowed down global trade and global economic activity somewhat. So from the point of view of the industrial demand, well, it's one of the considerations because it's going to increase their costs. Let's say some of them go to renewable as inputs for various industries, manufacturers, renewable power, and even for solar panels for the likes of copper and
Yes.
silver, respectively. So, you know, it could, there's an underlying risk there. It could drive the metals. Some of them are, if some of them are indirectly used in industries, construction, etc. So
Yes.
that could lead to, and some electronic products. So that could lead to higher input costs and could potentially add to prices and inflation. So, but the thing is, it's really, these are fund flows more than anything else. Given the investment flows, and let's see if this would sustain. We just saw the profit taking
Yes.
from 3.5 gold at five, more than 5.5 now. It's
Yes. Yes,
5.1,
definitely.
5.2. Yeah, because it's too rapid, and you
Do you
know,
still think
the,
if buying gold today is still more of a protection than a risk, given
well,
it going much higher than it was the other day?
it's like momentum trading of sorts. It's kind of elevated and expensive, but yeah, they try to ride on until it corrects lower. So it's there's some speculative
Yes.
aspect to it, and the thing is, uh, you know,
Do you think this is
other
going to
fund
last
flows.
or is it temporary?
Well, we'll see. Well, you need, say, sustained weakness in the dollar to sustain the pickup in commodities like gold, given their inverse
Yes.
relationship being alternative investments and the geopolitics as well, the
Yes.
need for safe haven. But of course, there would be packets of correction given how rapid the prices have gone up. Just 2 years ago, maybe even 4 years ago, gold was just like 1,700,
Yes.
1,800. Then last year it was like at the 3,000 level. Oh, well, more than 3,000 levels and 4,000 levels. So it's
And now
kind of
more than
rapid, though.
50% growth. But Michael, given the current mix of growth, inflation risk, and global uncertainty, where should investors be most cautious?
Well, because this geopolitical risk. Actually, that's one of the reasons. The unpredictability of Trump, his tariff threats. One by one. Now Iran. They're trying to negotiate for a nuclear deal, or they'll be attacked. And so that's one of the geopolitical, and there's oil involved there.
Yes.
That's why oil prices are at 4-month highs. That's why local oil fuel pump prices have gone up in recent days and weeks. So that's one consideration. Greenland, but Ram said he would insist on acquiring Greenland. On Venezuela, they're still there. They're trying to revitalize and revive the oil industry there. And of course, the other the other geopolitical risks, those in the Middle East, other countries in the Middle East. So,
So we see a lot of factors
that's
contributing to a lot of what's happening today.
yeah. Even in this part of the world, tensions between
Yes.
China and the neighbors. Like now, that there's tension with Japan, and of course, with the risk that question mark if that question mark, well, if indeed China plans to invade Taiwan, and of course our here the gray zone tactics also here in
Yes.
our country, the risk of war. So yeah,
It's a lot.
that's driving those safe havens. And but the thing is, but some of the fund flows, interestingly, because of the
Eh,
sell down in the dollar, some of them went to emerging markets like
Yeah.
here in Asia. That's why
And
it benefited
yeah.
partly the PSCI.
Definitely. And finally, Michael, based on the data you're seeing today, what is the biggest financial mistake Filipinos should avoid this year?
Well, of course, they should be, well, stick to their discipline, to their views. Well, uh, in choosing investments.
Yeah.
Well, because we have seen volatilities. If they invest in good say investments in good fundamentals, then the risk there is panicking.
The best not to
When
panic,
there's
yes.
so sell at the low,
Yeah.
buying at the high. So yeah, it's really that's the lesson. Given all those geopolitical risks,
Okay.
they should be in safe. Well, at least they should be well hedged. That's important. Well hedged and defensive at that, and of course with the
Yes.
best credit fundamentals and other investment fundamentals,
Okay.
so they can sleep soundly.
Okay, on that note,
Also.
Michael, thank you very much for sharing your insights on the economy. Thank you very much.
Thank you so much, Mr. Robert, and your viewers. Have a great afternoon, everyone.
Okay, don't go away. Business Brief continues after a quick break. The Philippines' push for electric vehicles is at a crossroads, and the stakes are higher than expected. Defunding the government's EV program could turn local auto manufacturing into a sunset industry. Auto industry leaders warn that uncertainty over funding for the RACE program or revitalizing the automotive industry for competitive enhancement threatens around 90,000 jobs. On Bilyonaryo News channels, the Philippines Metal Workers Alliance Secretary General Ray Racing says he hopes the government restores its commitment to strengthening the local industry.
Talagang magiging sunset industry na rin yung automotive industry dahil kung walang magmamanufacture ng electric vehicle dito, di puro imported electric vehicle na lang.
Racing adds the automotive sector accounts for about 9% of the country's GDP, making it a major source of taxes, jobs, and industrial activity. Without a strong EV policy, the country risks losing jobs, investments, and a vital pillar of its manufacturing economy. Polo, prestige, and tradition meet on the Manila field, but the spotlight also falls on the strands. First Lady Liza Araneta Marcos attends the 21st Enrique Zobel Memorial Polo Cup at the Manila Polo Club on January 25. The annual tournament honors the legacy of one of Philippine polo's most revered figures. It is held in partnership with PGA Cars. The First Lady mingles with guests, poses for selfies, and watches the matches, capturing players in action. She wears a classic white shift dress with ballet flats, reflecting tradition and sportsmanship. This highlights how cultural and sporting events continue to draw national attention. It also underscores the role of high-profile figures in promoting tradition and public engagement in sports. A public figure reminds followers that advice is meant to guide, not to single anyone out. Late Senate President Juan Ponce Enriquez's daughter, Katrina, clarifies her social media posts are for support and reflection, not targeting individuals or groups. In an Instagram statement, she urges followers not to personalize her reflections. She encourages readers to take what resonates and leave the rest. Enrile describes her account as personal spaces for selective engagement that respect diverse experiences and beliefs. She closes her statement hoping everyone approaches life with thoughtfulness, kindness, and peace. This highlights the growing role of a mindful social media use. Public figures are shaping conversations while encouraging respectful and thoughtful online communities. A state fund buys into ports, but it's not about taking control. Maharlika Investment Corporation says its port investment is focused on growth, not ownership. On BNC's Business 360, Maharlika Director Stephen Kunying stresses that investing in ports and transport infrastructure makes trade faster, cheaper, and more efficient. He adds the projects remain profitable ventures for the fund. The state funds an 11.2% stake in Asian Terminals Incorporated, a move that has drawn both praise and criticism. Officials insist it aligns with Maharlika's core philosophy of strategic, growth-oriented investments.
If there is an operator who's willing to invite us, who has existing operations which can be improved and can be expanded, and is also looking at additional ports, don't you get both? The benefits of an expansion, which is like a greenfield, but the benefits of participating in an existing operator, which is already profitable?
Yeah.
So why not do both
Yeah.
when you invest, which
Okay.
we hope we've achieved with our investment in ATI.
Maharlika is targeting infrastructure that boosts trade and growth while still prioritizing profitability. The world can't be run by one superpower or divided between two. United Nations Secretary General Antonio Guterres warns that global challenges need collective action, not domination by the US or China. Speaking at the start of his final year in office, Guterres says global problems will not be solved by a single country calling the shots or by rival spheres of influence.
Global problems will not be solved by one power calling the shots, nor will they be solved by two powers carving the world into rival spheres of influence. It is important to accelerate deliberately and with determination multipolarity, one that is networked, inclusive by design, and capable of creating balance through partnerships. Partnerships in trade, in technology, and in international cooperation.
His remarks come as the UN navigates global conflicts, pressure on multilateralism, and a funding crisis. This underscores the importance of balanced diplomacy. Engaging multiple partners can help the country navigate global tensions while protecting national interests. Amazon may be betting big on artificial intelligence, and the numbers are staggering. The tech giant is reportedly in talks to invest up to $50 billion in ChatGPT maker OpenAI. The deal, still in early stages, could make Amazon the largest contributor to OpenAI's current fundraising round. OpenAI is seeking up to $100 billion in funding as it races to secure partnerships with big tech companies and investors. This investment could give Amazon a competitive edge in the rapidly growing AI sector. This signals that AI-driven technologies will increasingly shape global markets. Businesses may need to adapt to innovations driven by major tech investments and shifting industry standards. Southeast Asia's IPO market staged a strong rebound in 2025, with total deal value surging 76% to $6.5 billion, even as the number of listings declined across the region. Singapore led the region in proceeds, raising nearly $2 billion, its strongest IPO performance since 2019. Malaysia recorded the highest number of listings, while Indonesia and Vietnam made meaningful contributions to overall market capitalization. In the Philippines, fundraising nearly tripled to $596 million, largely driven by Manila's blockbuster offering, underlining the market's heavy reliance on a small number of large deals. Looking ahead, investor demand remains selective, with capital flowing mainly into real estate, energy, and financial companies, supported by regulatory adjustments, lower interest rates, and improvements in market infrastructure across the region. Early prevention can mean the difference between stability and disruption. An independent health reform advocate urges Filipinos to stay calm but cautious amid the Nipah virus outbreak in India. On Bilyonaryo News channels at the forefront, Dr. Tony Leachon says Nipah virus is a rare but serious disease. He notes it spreads from animals, particularly bats and pigs, to humans. While it does not spread as rapidly as COVID-19, Leachon warns the virus has a high fatality rate of 40% to 75% if it reaches the brain. Leachon acknowledges the Department of Health's proactive screening at the borders. He advises the DOH to strengthen public information campaigns to counter misinformation.
If we over-communicate, and there's nothing wrong with that, and support that with social media infographics, siguro hindi matatakot ang tao. Kaya siguro ang tao ay inquisitive because galing nga tayo sa COVID and we don't want that to happen.
Leachon emphasizes optimistic vigilance, urging the public not to panic while maintaining basic health and safety protocols. He adds monitoring should include travelers and animals entering the country. This means strong health surveillance safeguards businesses. It helps protect workforces, maintain supply chains, and prevent costly disruptions in tourism and agriculture. We will return with more insights. This is Business Brief. Gold and silver have hit record highs as the U.S. dollar weakens, raising alarms about a potential economic crisis comparable to 2008. Experts warn that soaring gold prices signal trouble for the dollar and U.S. debt, while Bitcoin has struggled, dropping more than 30% from October highs. Investors are flocking to tangible assets like gold and silver, leaving digital currencies on the sidelines until Fed policy or geopolitical uncertainty stabilizes. Market watchers say the dollar's decline could intensify, with potential ramifications for global finance and cryptocurrencies in 2026. Shares slip in Asia after a day of dramatic swings on Wall Street that included Microsoft's worst drop in nearly 6 years. The S&P, ASX All Ordinaries, FTSE Bursa Malaysia, KLCI, Hang Seng, JSX Composite, KSE 100, Nikkei 225, Thailand SET, Shanghai Composite, and BSE Sensex trade lower, while HNX 30 shows a modest gain. In currency markets, the US dollar trades at 153.90 against the Japanese yen, 7.80 against the Hong Kong dollar, 126 against the Singapore dollar, 14.40 against the South Korean won, and 31.43 against the Thai baht. The Australian dollar trades at 69 cents against the US dollar. In commodities, gold falls over 3% and oil prices are mixed. In crypto, Bitcoin drops nearly 2%, while Ethereum slips almost 4%. Philippine shares end in the positive territory in the final trading day of the week, even though the country's economic growth slows to 3% in the fourth quarter of 2025. Nearly 2% higher to 63.28. Among the sectoral indices, only mining and oil ends in the red, with financials rising the most at over 4%. Decliners outpace advancers 108 to 90, while value turnover is at 14.6 billion pesos. Majority of the day's most active stocks end in the green, with BPI rising the most at almost 10%. And in currencies, the peso closes at 58.86 against the US dollar, up from the previous close of nearly 58.95. Trump says the new Fed chair pick is coming as soon as Friday. The president said he will announce his choice to replace Jerome Powell, whose term as Fed chair ends in May. Trump has publicly urged deep interest rate cuts as the Fed holds rates at 3.5 to 3.75% after its latest meeting. The announcement comes as speculation builds around a four-person shortlist to lead the U.S. Central Bank. A U.S. jury convicts a former Google engineer in a case that underscores rising risks around AI intellectual property. Former Google software engineer Lin-Wei Ding is found guilty by a federal jury in San Francisco of stealing AI trade secrets to benefit two Chinese companies he was allegedly working for in secret. The U.S. Department of Justice says Ding was convicted on 7 counts of economic espionage and 7 counts of theft of trade secrets following an 11-day trial. Prosecutors say the stolen material included thousands of pages of confidential data related to Google's hardware infrastructure and software systems used to train large AI models in its data centers. Some of the information allegedly involved chip designs and system architecture intended to give Google a competitive edge in cloud computing against rivals. For businesses, the verdict highlights how AI has become a strategic asset and why protecting trade secret is now a core competitive and national security issue. Visa surges past first quarter estimates driven by strong holiday sales. The payments giant saw a boost in card usage during the holiday season, fueled by resilient U.S. consumer spending, particularly among higher income households. Global payment volumes jumped 8% on a constant dollar basis, with Visa crediting strong demand for its value-added services. The results reflect a robust economic indicator for consumer spending, echoed by peer MasterCard's strong performance. U.S. President Donald Trump launches a multi-billion-dollar lawsuit over the leak of his confidential tax records. Trump files the lawsuit against the U.S. Internal Revenue Service and the Treasury Department, seeking at least $10 billion in damages. The suit filed in federal court in Florida accuses the agencies of failing to protect his tax returns during his first administration. Trump files alongside his son, suing in their personal capacity and not as government officials. The complaint centers on the unauthorized disclosure of tax records by Charles Littlejohn, a former IRS contractor working through Booz Allen Hamilton. Littlejohn is alleged to have illegally accessed and shared Trump Organization tax data with media outlets including the New York Times and ProPublica. For businesses and taxpayers, the case raises high-stakes questions about data security, government accountability, and the cost of failing to protect confidential financial information. Meta's earnings boost Mark Zuckerberg's fortune by $22 billion, making him the world's fourth richest person. Meta shares jumped 10.2% Thursday, hitting over $737 billion, its biggest intraday surge since July 2025. This comes after the tech giant reported $59.8 billion in fourth quarter revenue. It also recorded $8.88 earnings per share, marking year-over-year growth of 24% and 11% respectively. Meta raised its capital spending projections for 2026 to $115 billion to $135 billion, aiming to accelerate development of AI products after spending $72.2 billion in 2025. For Zuckerberg, the growth translates to an increased net worth, now amounting to $252.9 billion. He's now head of Amazon founder Jeff Bezos at nearly $252.1 billion on Forbes' real-time billionaires list. For investors, Meta's strong results and ambitious AI spending signal growth potential, but also hint at heavier capital outlays in the coming year. King Charles III says the world is rapidly going backwards in fighting climate change and biodiversity loss. In a new documentary, the monarch calls for urgent action, expressing frustration over the lack of progress. Filmed over 7 months, the documentary showcases his lifelong environmental efforts and the work of his King's Foundation. The film offers a candid look at Charles' vision for harmony with Nature and will be released worldwide on February 6. Technology is now helping humans catch what humans might miss. Earlier breast cancer detection is getting a boost from artificial intelligence. A world's first randomized controlled trial show AI support helps doctors identify more breast cancer cases during routine screenings. The study, published in The Lancet, involved over 100,000 women undergoing mammograms across Sweden in 2021 and 2022. Results reveal 9% more cancer cases detected in the AI-supported group compared to standard screening alone. Over 2 years, the same group also saw a 12% lower rate of interval cancers, tumors found between scheduled screenings. Researchers say AI could ease the workload for short-staffed radiologists while improving early detection. They caution, however, that any wider rollout must include careful monitoring. This signals AI's growing role in healthcare, boosting efficiency, reducing cost pressures, and creating opportunities in medical technology. Adopting similar AI tools could enhance early cancer detection and relieve pressure on local radiology services, potentially saving lives while streamlining care. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again next week for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.